Hi, I wanted to talk about this pullback that we're going through right now in silver. A lot of people are selling out of their positions right now, or they're thinking they bought in at the wrong time. And I just wanted to show you some of the history of this. First of all, silver is a roller coaster, and I said in my book that it's a wild ride. And if you don't have the tolerance for it, don't get into it. It's a roller coaster of a ride. But this is the entire bull market of silver, and what you've got to look at here is the trend. And this pullback that we're going through, this has all happened before. Here there was a major drop from 850 down into the high fours, and then it goes up to about 15 and drops again to like 9, up to 21, down to $9. So silver is a roller coaster, but you've got to look at the average trend, you have to look at the supply-demand fundamentals, and you've got to look at how much silver is there on the exchanges and in the dealers for investors to buy compared to gold, and where is the dollar going ultimately. If you look in my book, you'll see that there's a very, very detailed analysis, and one of the conclusions that I come to is there is no scenario in which gold and silver do not rise. Ultimately, they are destined for far, far higher prices than this. And one of the things that is happening right now is all of the people that use leverage. If you read my chapter, Beware the Pitfalls, there's leverage is the first thing I caution against. This is a professional's game. So if you are using margin or gold and silver purchased on margin, if you are using futures and options, if you're using ETFs, there's a whole bunch of ways that you can be scared out of gold and silver very quickly. And this is one of the things that causes the roller coaster effect. But you got to stop measuring your wealth in dollars and start measuring it in ounces. This goes up and down. I have been buying during this entire bull market, and I have bought on these peaks, and I don't care. Let me show you something right here. This is gold, and this is from early 2002 through the end of 2003. When I first started buying gold, the very first time that I went in to a dealer and I bought a bunch of gold eagles and stuff, I bought at 315 in October of 2002. So I bought way down here. And then immediately, the day after I bought, gold started to rise. And it started going up and up and up, and it's going past 325. And I'm going, should I buy? No, 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 I'll wait for a pullback. Should I buy now? And it rises and it rose all the way to 392. And I went in on that day and made a purchase of gold right on that peak. The very next day it starts to fall, and it didn't stop until it fell all the way down to 325, and it took close to a year to get back into new highs. And I punished myself for that entire year. But you know what? I would give anything to go back and make that same mistake 100-fold today. I would go all in on that peak right now if I could go back and do that. And here's one thing I know. If you look at what they're doing to the US dollar, ultimately, gold and silver have to be at far, far higher valuations. They're just buying, the amount of stuff that they purchase today is too little. They have to go to far higher prices. The dollar is sick, and we've got a maniac named Ben Bernanke running the Federal Reserve, intent on trying to save the economy by destroying the dollar, which will destroy the economy. So if you're thinking about selling, think twice. I mean, I don't want to tell you what to do. What you do is ultimately up to you. But for myself, I am still buying, and I am hoping for an even greater pullback than this. This, on a percentage basis that we're going through right now, is not as great as the pullbacks of 2004 and the pullback of 2008. The pullback in 2008 from 21 down to below 9, that was thrilling. But guess what? I was able to buy down on that. Even though I bought up at this peak, if you take the same amount of money and you buy on a peak, And then you take the same amount of money a few months later, dollars, and you buy on a dip, you're going to get a whole lot more ounces on that dip. So these pullbacks are just other buying opportunities. And the people that call tops, it's doing people a disservice if I try to call a top and say, now is not the time to buy. Because there's going to come a day where this goes north and it doesn't stop. And if all you've got is digits instead of ounces, you're going to be in trouble. That's the way I think. And so I am not worried about buying on a peak and experiencing a pullback like this that personally I consider a little pullback after going through some of these big thrill rides myself. So here's what's happening right now. My sales team in there are dealing with some of these calls are with customers that just bought a few days ago or a few weeks ago, and they're selling back at a loss. And if we have to, we will make a purchase from a customer. A dealer makes a tiny, tiny little microscopic spread either direction, so it doesn't matter to us. But we strongly feel that it's in the public's best interest, that it's in your best interest to take a position and ride it through the entire bull market and don't sell it at a loss, because there are some big gains coming just based on history, based on the fundamentals of how much gold and silver purchase. So anyway, that is my take on the current pullback. And again, if you're thinking about selling, study the situation, think twice, and selling at a loss is letting the big boys play on your greed and your fear. The big boys know no greed or fear. They trade solely on numbers, and right now there is an enormous wealth transfer getting transferred out from the hands of the public to the big banks like JP Morgan and the other people that go short silver. And so letting them win at your expense is very, to me, short-sighted thinking. Do ultimately what you feel is best for you, but I'm still buying. Thanks. I wanted to introduce you to the managing director of GoldSilver.com, James Anderson. James has been experiencing firsthand this pullback and the reaction that the public has, and a lot of people get scared on this kind of stuff, especially if they bought like the day before the pullback started. So what's your take on this?
Well, yeah, I mean, there's when the price rises like this, you get a lot of people, a lot of attracted investors who want to come in, and in a pullback like this, as violent as it is, it scares a lot of people, and it's sadly, it scares a lot of the people, to actually sell at a loss at times. So, it's disheartening to see the big boys win, and we don't want them to sell. We can't tell them what to do, obviously. So some people they're gonna do what they want to do. But the key in this whole thing, like you said earlier, you told me thousands of times, it's the question of how many ounces you got. It's not about how many dollars, because ultimately the dollar is going to run its course, like all other fiat currencies. So, I mean, it's just to keep it in perspective. This is a bull market, and it's going to last for years. Yeah. So just keep it in perspective.
And this is just one of the little jags in this roller coaster, and it's like painful to see somebody take a loss, isn't it?
Yeah.
Because you don't lose anything until you make that sell back. When you're scared out of your position, that's when the loss occurs. The loss doesn't happen when the dollar measured against silver changes or measured against gold. It's when that change occurs, and then you confirm it and set it in stone.
Yeah.
So.
Yeah, I mean, there's people who bought, in the teens and who are even selling now, and this isn't just a 1 or 2 year. This is a longer term investment. You want to hold this as your safe haven asset, for the long haul. So don't be shaken out on a 2-fold or a 3-fold of your investment. I mean, this is something that can be a 10-fold investment down the line.
Yeah.
So long term perspectives are the key, and to stay as unemotional as possible.
Right, and also measuring the purchasing power of gold and silver is very different than measuring the price. And people see this little price drop, and to me it's little because I've been through much, much larger ones in the past. So basically, don't let the big boys shake you out. Don't let them scare you. Don't let them take you for a ride.
Yeah.
Average of about 4 ounces of gold. And if you start back in 1900 up to 1929, got out of whack, it went into a bubble to 18 ounces of gold. However, that was just the stock market moving. It was stocks moving, but not gold. Gold was $20.67 an ounce. Then the markets crashed, and it reverted past the mean down to just 2 ounces of gold in 1932. Then we went up in 1966 to about 28 ounces of gold. And then the stock markets went sideways, but gold began to move because it became